Silver is no longer trading inside a normal financial system. It is trading inside a geopolitical one. In Josh's and our own view, price is no longer set by paper leverage or retail demand. It is set by who physically controls metal, where it is held, and which nation can claim jurisdiction over it.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci. This is the Gold Fix Market Rundown. Hello. Silver is no longer a trade. It's a territorial contest in a world that is beginning to noisily split in two. Scottsdale Mint CEO Josh Fair says silver price is being determined by sovereign competition, institutional vault control, and jurisdictional custody. In a world fractured since COVID, metals are now strategic assets. Volatility isn't a sign of chaos. It's the sound of a divided system repricing a physical reality. We are living through a structural break that most market participants still refuse to acknowledge, even as the ground shifts beneath their feet. The world did not simply suffer a pandemic. It fractured. Supply chains fractured. Trust fractured. Monetary assumptions fractured. Correlations, as we are fond of reminding people, fractured. And now, commodity markets are beginning to reveal what that fracture really means. Silver is no longer trading inside a normal financial system. It is trading inside a geopolitical one. In Josh's and our own view, price is no longer set by paper leverage or retail demand. It is set by who physically controls metal, where it is held, and which nation can claim jurisdiction over it. China is accumulating. U.S. custodial inventories are encumbered or spoken for voluntarily constrained. European banks appear increasingly exposed as unfit for purpose. Institutional stockpiles are now strategic assets, and futures markets are slowly losing their authority as the primary price discovery mechanism. This isn't a short squeeze story. It's a sovereignty story. Since COVID, the world has been moving back toward hemispheres of control. The Monroe Doctrine is resurfacing in modern form. Critical minerals are being weaponized. Smelters, vaults, shipping lanes, and custody rights are becoming instruments of policy. We do not know how this ends, but we do know this. The old market structure is gone. Silver is no longer just a metal. It is a signal, a canary in the coal mine, if you will. Oil will be the spark if it comes to that. The signal says the world is not going back. Good morning. There's the homepage, and here's the markets. 10-year yields are up 2. The dollar is down 11. The S&P 500 is up 9, almost 10. The NASDAQ is up 86. The VIX is down 11. Silver is trading 89.02, down $3 and change. Gold is $45.99, down 16 and change. Shanghai copper closed at 101. Shanghai gold closed at 47.78. Copper is 577, down 14. WTI is 59.78, up 48. Natural gas is 323, up 4. Bitcoin is down. Ethereum is down. Palladium and platinum are both down big. Gold, silver is up 1 1/4, up 1 1/3, and grains are mixed. Okay, quick comment on the markets. We made a big deal, and we're right to do so, about the presidential proclamation on metals. Specifically, it was about rare earth metals. Now, I want to clarify something here, which is one of the reasons that we sold off yesterday, and one of the reasons that we're retesting the downside today in metals, especially silver and copper. The critical minerals, which include silver and copper and lithium and everything else, those are all metals that, for the most part, we have on land. Now, we may not have silver here. We have to import it, that's for sure. I'm not going to argue that. but I'm going to make the point that we can import it. It's from Latin America and we're pulling it in. So it's a critical mineral. The proclamation, which is about all minerals and all metals, focused on the ones that we cannot get. So we have to import 75%, let's say, of silver, but it comes from friendly nations. We have to import 100% of lithium, but it comes from unfriendly nations. So my understanding, my digestion of what happened yesterday, the 14th, 15th, and 16th, is as follows to give you some semblance of rationality so you can look going forward. I warned people about the Ides of January. This is the Ides of January. So here's what happened. Between January 14th and January 17th, it was expected at the institutional level that the government would make an announcement regarding Rule 232 and tariffs. And they did on the 14th. That is the proclamation. The proclamation says no tariffs on anything yet, 180-day window of negotiation. And after those 180 days are up, we're going to make a decision on tariffs. Now, between the beginning of the 180 days and the end of the 180 days, what you have is you have a nation that's going to accumulate, that's going to buy, that's going to get what it needs to get, when it can get it, how it can get it. At the same time, China, who is aware of this, right? They're going, oh shit, they may tariff this, they may not, but whatever's going on, they're buying it. So they're buying it too. So you have a custodial race for metals. And the ranking is, we need to buy lithium. We need to buy uranium. We want to buy silver, right? We have copper. That's the ranking. Lithium, uranium, silver, copper. You're just using those four metals. There's obviously plenty of other assets that we're looking at here. Okay, so I'm giving you the geopolitical chess, at least the way I see it, how it's going. So the United States says all critical minerals are critical. Boom. Okay, but the ones that we import from countries that we're not friendly with, like China, right, we have to make a decision on. So right now, well, not right now, running into that announcement between, say, January 1st, or let's say actually since October, since the first 232 comment to now, the market has been sorting out what the government will do. Well, we know what the government will do because they're doing it. We told you. We and Josh Fair told you that the U.S. is buying concentrate from Latin America, hand over fist, coming into the U.S., hoarded for U.S. use. That's their response for silver. We're going to hoard metal. That's why silver ran up as precipitously as it did. And that's why silver is going to come off. I'm not predicting it today. Don't hate me. I don't care. Hate me. Okay. Silver is going to come off. But if you listen to the first thing I said, this is a new reality. Now, back to the script here. So how did we respond to the expectation of silver either A, not being tariffed, but we want to get China out of Latin America? Boom, that's what we're doing. Or B, being tariffed, we want to make sure we have enough in-house before we tariff it. And so there you have it. Do you know what, to give you an idea, do you know what we would do to the rest of the world if we said silver's tariffed? Now, are we going to do it? The odds are extremely small, folks, extremely small. But it could be. If we tariff silver after basically sucking dry Latin America of all the concentrate, JP Morgan going into every miner saying, we want it, we want it, we want it, we want it. 5 years, 5 years, 5 years, 5 years. That's it. No more concentrate leaves Latin America. That's all our silver. And once we secure that concentrate and the smelter's built over the next 5 years, what happens? We say tariff silver. And the price that we tariff it to, we actually buy it at. Small amounts, but enough for the rest of the world to comply with our price. And the price of silver permanently stays up. That's how tariffs work. You see, price floor is what you buy and don't tell anyone at. And when you've bid it up to the price floor, then you call that the tariff. That's what they're doing in silver, my opinion. Copper, very similar. Copper, we actually have a lot of copper ore domestically. Same idea, though. We need to build something that makes semi-finished copper cathodes, right? So we want to make sure that China can't get any copper out of Latin America. They ain't getting any copper from us. Bang, 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 bang. We build a refinery, we build a cathode maker, and then eventually you will have a tariff on copper. I don't know when, okay? Lithium. Well, shit, we don't have any lithium, right? We don't have access to lithium. Okay, well, we kind of colonized Argentina and we kind of like put a foothold in Venezuela. We're getting lithium. It's just shit you get out of the ground, folks. And, as much as I love China's exploits into metals and how they're making us all wealthy, they're also leveling the playing field for everyone. It's just shit in the ground that you have to redo something with. And who's going to do something better with it than us? No one that I know of. So what are we doing with lithium right now? Well, shit, we don't have access to lithium. All right, well, we've already got footprints in Latin America. Let's see if we can cut deals with who else has lithium. Let's cut a deal with them, right? Maybe I don't know, but maybe Greenland has lithium. Maybe they've already mined lithium, and we're just. The point is, we're securing the future of the United States' ability to remain self-sufficient in a world that has deglobalized. So, bringing it back to the chart, that's why silver's down. That's why copper's down. Because the event, the presidential proclamation, said no tariffs. No tariffs is bearish for copper, for silver, for gold, for everything. Not because there's peace, not because there's happiness. It's just kicking the problem down the road while we buy more. So we've been buying. So here it goes. Silver. Oh shit, we better start buying it. Buy it, buy it, buy it, buy it, buy it. Everyone starts buying it. China goes, oh shit. They start buying it, buying it. And then we say no tariffs, everything backs off. But it backs off at a higher level. Can silver crap out to $50? Sure. Would I buy it? Of course I'd fucking buy it. You got to be out of your mind. Okay. Anyway, as I said, I'm looking for miners now. That's what's going on. That's the correct, in my opinion, that's the correct take on what's going on in markets right now. Look at the markets. The metals that were up are down. I don't have lithium available. Uranium is an example. Uranium is probably up and then up more because shit, they bought it and now they're going to buy even more of it. We have to secure supplies. Hi, Canada. I know you have a lot of uranium. That's probably what this is going to be about at some point. Okay. Enough with that's why the markets have done what they've done. This is a story that I based that on Metals Exec, Silver Physical Market under Strategic Pressure, right? That's Josh Fair. And essentially, Josh Fair did a video. We had discussions, and we did a collaboration on a post. News and analysis found the special price floors are coming. That's what we just said. If you don't know what a price floor is an inverted tariff. A price floor is, I'm going to buy all I can up to 100. And I'm going to take my time over 3 years. And then after I get all I need up to 100, I'm going to tell the world I'm tariffing the shit out of it up to 105. And then watch them panic. That's why China's panicking. They know what's coming. They're not dumb. Coming soon over the weekend, HSBC's gold outlook for 2026, silver's cresting wave. That's also their outlook for 2026. ING, believe it or not, calls their report the metal's new era. It's almost like they're listening to Michael Oliver, silver's new reality. Me, what I'll say, the silver reset, the silver recalibration, other people. By the way, it's also dangerous when a bank like ING says that. The future of work, what AI will do to transform work in a very thorough explanation by a firm that will remain anonymous. Morgan Stanley, coincidentally, they see buying of uranium returning. And it's kind of inelastic demand, which makes sense given all the news that's coming out. Speakers today, we don't care. So now I'm going to pull up a chart, 4 charts to be exact. The first chart I'm going to pull up, this is to the presentation I did. This is relevant to it. This is copper between 1990 and 2007. Sometime between 1990 and 2004, copper was a sleepy metal. You buy it at 50 cents if you can get it, and you sell it at $1.50. I remember that. I mean, I didn't trade copper that much, but it was a pretty cool market, even though it was like that. And then something happened in 2004. I don't know exactly when, but the market changed. And as Michael Oliver pointed out to me, which made me click on my stories and his charts, it broke out. And it broke out into a new reality. Now, it's continuing to go up. I'm not going to argue with that. But it broke out of a new reality, and then when it retraced to a higher level. That's 2004, 2006 is when this whole era started. 2006 is when you probably get your perfect technical breakaway, but 2004, 2006 is when things changed. And when those things changed, it had to do with China. Let's go to oil. You don't think of oil this way, but maybe you should. Here's oil from 1990 to 2004, 2000, well, actually 2007. 2000, between 1988 and 2004, you had oil. Long base, usually a $20 item with spikes during wars. That's the Iraqi war, and the second one is 1999 and 2000 and Y2K and easy money. But you see those two spikes, spike, and then another spike recently, and then not recently, in 2000 and 2003. Then you have 2004 to 2006. I'm sorry, 2004, that's the year. In that year, something happened. I don't know. And then after that, oil rallied and it never looked back. I'm going to put a little star next to never. And it stabilized at much higher prices. Then, obviously, oil is the most important commodity on earth. And so when they can knock it down, they knock it down. It went negative at that one time. But this is the reality of oil since then. It's been between 40 and 80 bucks. That's the price of oil. 60 bucks. Everybody saw that show with what's it called? Landowner. Same idea. 60 bucks. That's what we want. And that's what everyone wants. Well, I'm not getting into details now, but so now that you've seen that, you've seen, again, to retrain your eyes. Copper, 1990 to 2004. Oil, 1990 to 2004. Okay? Gold, 2012 to 2024. Silver, this is the mama of all charts, right? I mean, this is crazy. It actually goes back further, but I don't want to be a pig about it. But let's do it. Why not? Silver, call it 1980. We want to leave that spike in there. 1980 to 2024. Now, the chart formations are very similar, not in magnitude, not in length, but they're very similar. It's a couple spikes here and there that we never get back above again. And then what you really have is a long trading range that is a sleepy commodity. So you could argue, for using silver as an example, that the same thing happened in silver in 2004, 2006. I would argue that that's not the case because this broke down a lot lower. What's the same about silver, gold now versus copper, oil then? Well, back in 2004, China opened up on the global stage. They became part of the WTO. They announced that they were part of the global market. They started buying on the global market. They got the yuan, put in the SDRs. They started going on the global market for oil. They started going on the global market for copper. They started building everything out. And that's when you got industrial commodities reflected a new era because they were building. And now here we are, 20 years later, and now we're looking at monetary commodities reflecting a new era. Who bought the commodities back in those days? Copper, oil, lead, aluminum, all that coal, all that shit was China coming out. Do you remember the 2008 Beijing Olympics? That was them announcing to the world that they were there with all the drummers. Do you remember that? Remember what happened to the US stock market when that happened? We crashed because oil got too high, rates got too high, and housing was too full of shit, and we crashed. Now here we are in the next phase of China coming out on the world market. And I'm telling you that what happened in industrial metals is now happening in monetary metals, and it's not looking back. So why is silver up so much? Because part of it is like copper and part of it is like gold, because silver's more than money. Silver benefits from both of these things now, because for 50 years, it suffered from both of these things. So I would put to you that the world is now making room for China in a monetary way, the way it made room for China in an industrial way in 2006. I would put to you that China and the US are on the same page in doing this in an attempt to keep the market stable while letting gold and silver and other commodities go up again, because they do not want to crash the world market like they did in 2008. Again, this is a controlled inflation. That's it. Have a great day.
Well, thank you, Vincent, for another fantastic week of coverage here on the Arcadia Economics channel, where our beloved Vince brings us not only the activity in the gold and silver markets, but makes sure if anything happens in soy or wheat, that you're kept up to speed on those as well. Wow, what a fantastic and wild and volatile week. Hope you enjoyed it, and good Lord only knows what will be in store for next week. But real quick, before we send you off to the weekend, did want to pass along an update from Fortuna Mining, where they did just release their fourth quarter production numbers yesterday before the open. Came in with production in line with guidance, and actually, press release also talks about two of the projects that they are rapidly moving forward that will likely be a big part of their production in the next coming years as they get to that 500,000 ounce per year mark. And here's a quick note from Jorge, who I caught up with yesterday, talking about what's going on at Fortuna.
The big story for us is with the outlook, because we have a very strong organic growth pipeline. We have two paramount projects for the company. One is the construction decision for the Diamba Sud project, which we are quite sure that we will be making a positive decision and full investment decision by mid-year. We are well advanced with our permits, and we are so encouraged by the strong economics of the study, the PEA, preliminary economic assessment we delivered last year, that we have this year allocated a $100 million budget to advance the Diamba Sud. The Diamba Sud is a project that at $2,750, that's the price we used in the study, yields an internal rate of return of 72%. The payback on the project is a few months. So it's a project of robust economics at $2,750. I don't even want to plug $4,600 into that financial model because, what number are we going to get?
Well, thank you, Jorge. Sure appreciate everything he shared there. And in case you did not hear yesterday's call where Jorge talked about the production numbers, Diamba Sud, the plant expansion at Seguela, and more, well, that one is coming your way now.